Good morning and welcome to the Killik & Co market update. UK markets are looking pretty happy this morning following the news of the Conservative majority. The victory means that the government can now start to move forward with Brexit, and markets have responded very positively to the prospect of an end to the political deadlock that we've been experiencing for the last 3 years. The government's withdrawal agreement can now be taken back to the House of Commons, and if it passes a vote, we will be set to leave the EU on the 31st of January 2020. Only then can discussions start to take place as to the sort of trade deal we can expect to have in place with the EU. Boris Johnson has said he hopes to have some kind of deal in place within the next year, but many analysts have said that is a fairly ambitious timeline. Nonetheless, markets have responded very well to the prospect of having some kind of certainty over exactly where the country is heading. Looking at the markets today, we've seen particularly strong reactions from some of the companies that are heavily exposed to the UK. If we look at the FTSE 250 index, for example, which contains a number of smaller and medium-sized companies that depend mostly on the UK for revenue, we can see that the whole FTSE 250 index is up over 4% this morning, and that really is quite a significant move for a stock index. Looking at some individual companies, we can see that companies depending on the UK for their revenue have experienced some quite strong share price moves this morning. For example, house builder Persimmon shares up over 11% this morning. Some of the UK banks such as Lloyds and RBS also both up quite significantly this morning. And also National Grid, the utility company, that's up quite heavily on the news that the nationalisation threat from Labour has now subsided. On the other hand, some of the larger, more international companies have actually experienced share price falls this morning. And the reason for that is the strength we've seen in sterling. Sterling has actually risen to 135 against the dollar, and that's actually bad news for some of these big international companies that earn a lot of their revenues overseas. When those overseas revenues are converted back to sterling, if sterling is stronger, that means those revenues now look to be less in sterling terms. And that's the reason why we've seen some share price falls this morning in some of these larger FTSE 100 companies. For example, a healthcare company, GSK, some of the big oil companies such as Royal Dutch Shell, and some of the major consumer goods companies such as Diageo and Unilever. And it's actually quite interesting to note that following the referendum back in 2016, sterling actually fell quite heavily on the news that we would be leaving the EU. However, now, on the news that we've actually elected a party that wants to make us leave the EU, sterling is actually rising. And I think that really just shows that people are just relieved to have some kind of certainty over the direction in which the UK is trying to head. And finally this week, US markets have hit record highs on the news that the US and China are fairly close to agreeing some sort of trade deal. Trump published a tweet yesterday saying we are very close to a big deal with China, and that caused US indices to move to new record highs. Here's a chart showing the S&P 500 over the last 2 years, and you can see it closed yesterday at a new record high of 3168. Previously, the US had imposed a deadline of this coming Sunday by which it was going to impose new tariffs on China. However, CNBC reported yesterday that the US is willing to withhold those tariffs and also to reduce existing tariffs if a deal is in place before then. So this has happened before. We have previously hoped for a deal between the US and China, and yet nothing has happened. But on this occasion, it does appear that markets are particularly optimistic. So we'll be listening up very closely for news over the next couple of days. And finally, last week we talked about the suspension of the UK's largest commercial property fund, the M&G Property Portfolio. And we pointed out that when this has happened previously, investors have somewhat panicked and withdrawn money from other property funds across the UK. And in fact, the same thing has happened again. Almost £200 million has been withdrawn from UK property funds in the past week alone. So I think that is quite a concern. And that's the reason why the regulator is starting to look at whether or not an open-ended fund is the right kind of structure for an illiquid asset such as property. It's possible that over the news this morning of the Conservative majority, some confidence might return to the UK property market and that these withdrawals might slow a bit. But nevertheless, the structure of some of these funds does remain a concern for some investors and for the regulator as well. So that's a situation that we're watching very closely indeed. Moving on to the week ahead, obviously we'll be watching for any further comments from Boris Johnson. Looking at the corporate diary next week, it is fairly quiet as we approach the run-up to Christmas, but we have got results out from US companies Nike and Accenture. That's it from us. Have a great weekend, and we'll see you next Friday.